is the upthrust. And for those of you who don't know it, it's a fairly straightforward setup. All of these are going to be straightforward. The market makes a swing high here at A. It pulls back to B, and then it tries to go up and through the swing high at A, but it fails to follow through. To the upside. It peaks up above there. It penetrates up a little bit. It may stay up there for 1 or 2 bars, closing up above, but then it comes back down through. It cannot follow through to the upside, and price closes back underneath the swing high level at A, and now we have an upthrust play. And we take that trade on the close of the bar that closes underneath at the swing high at A. In other words, we take it on the close of the bar that comes back underneath the high of A. So these are just general charts. This is a daily chart here. Yeah, we're going to use tick and minute charts in a moment, but you can see here that the market comes up and makes a swing high here at A, comes down. Doesn't come down all that much in this instance, but it does come down. Then it tries to rally up. It stays up above for a bar here and then closes underneath and then starts and heads lower. So this is the basic upthrust pattern. And this is an example of gold on a daily basis. We're going to look primarily at the intraday, but all of these trade setups that we're talking about will do occur with regularity on all time frames, whether we're looking at a 4-hour chart, a 1-hour chart, a 5-minute chart, a daily chart, a monthly chart. It really doesn't matter. These all show up. So even though you might not be a day trader, and we're going to look at last week's day trading, you can apply this on any time frame. So again, here's crude oil. Makes a swing high at A, comes back to B, tries to go up above. This time it doesn't even close above the swing high at A. And we take it right there on that high bar. Sometimes we're taking it underneath. You can be, if you're watching the market and it's moving down, you can be a little aggressive if it's come underneath the swing high and underneath the close of the last bar and maybe underneath the low of the last bar. You don't have to necessarily wait until it's all the way down and closes. You can be a little more aggressive. Just remember that if the market, you give up ground for confirmation. The close underneath the swing high at A is, once it closes underneath, that confirms that that's not going to go up above. I mean, that's very unlikely that it's going to come back up through after that happens. So you get confirmation, but you're giving up ground. You're giving up, all of this in here. So if you want to play it more aggressively, I would suggest you wait at least until it starts breaking down through some lows and certainly some closes. Now, one of the things about an upthrust is that we will often, though not always, we will often see the market come back up and test. You can see as the market tries to come up and test, the volume recedes. That's what we look for on a weak rally. We're going to talk a lot about that tonight in different forms, but we see that there is no positive upflow, if you will, to the market. And the market has a little minor climactic action here by this large bar and then has a top reversal with the next bar down. And that is a test of the upthrust here. And that's also another excellent spot to either take an initial position, or if you had gotten in up in here, to add to or pyramid your initial position if you so desire. Okay, so that's an upthrust on oil. Here's one on the S&Ps, a couple of them actually, on the hourly. Here we have a swing high at A, we get a pullback down to B, we try to go up. Here the market does hold up above the swing high on its close for 1 bar, but immediately comes back down, and then that sends the market down. And the next day we get the same sort of thing. In fact, there was supply on this, right? As we come down, we get just the opposite of what we saw earlier on the test, where when the market went up, the volume went down on the test. Here, as the market goes down, volume increases. So that's supply in control of the market, supply over demand, if you will. Now, the next day, that supply doesn't just go away. We come back and we can see that there is supply in the market, and this market comes up to that level of supply, reverses here, but makes a swing high at A, reverses, comes down, makes a swing low at B, and then comes back up, tries to go up above, and look, it can barely penetrate the high there, and then starts heading down over the next couple of hours and into the overnight. And it's all because of the supply that exists in this market. In fact, you can go all the way over to here and see that supply. Look at the way this bar on this kind of volume closes right here. Only supply does that. Okay, and as we come up to this level here at this C, the market responds to that. We get strong volume coming down, and again, the next day, it occurs again. So understanding these principles of supply and demand that are set up by these upthrusts are useful even for not just the current day's trading, but what to anticipate in the next day. Will you cover targets and exits? Yes, Steve, I will. Let me make a suggestion. I've got a tremendous amount of material to go through. As I said, over 100 slides here tonight. And so I'm giving you an overview of these trade setups now in the first part. And then when we get into looking at the 5 trading days last week, I'm going to go into some great depth and detail. And so most of your questions will likely be answered. Believe me, I have no problem talking with you about it and no problem answering questions, but my recommendation would be to keep this going and keep the flow going, is that when a question pops up, just note it down. And once we get into the details, if I don't cover it, be sure to ask it. Okay, I'm happy to address any questions, and we won't leave until all questions are answered. By the way, one of the things I wanted to say is that these trades, these upthrust trades, can frequently, look at the move down from here, right? We go, this is on oil, we go all the way from about 60, maybe a little less than 65, all the way down to 40, right? Dollars a barrel. That's quite a run down. This is not that unusual. Upthrusts have this propensity to take the market down quite a bit. And you'll see that so a lot of times here, for example, on the intraday, we upthrust yesterday's high. These lines in here are session breaks, right? So this is yesterday's high right here. We come up in the early part of the, this is probably the European trading in here would be my guess. We upthrust that and we start to come down. So you see that, and now you're looking for a short opportunity coming into the U.S. session. And then the next day, this is the U.S. session where we get the upthrust. And we get, this moves down all the way down and creates new lows. Both days here, we get new lows being made. So these can be pretty powerful little trade setups. Okay, question. Would you include 2-bar top reversals as an upthrust setup? No, not necessarily. If it happens, that's fine. When you have, obviously this is a top reversal, a 2-bar top reversal, and that adds to it. This should also add to your understanding of the market. Here we have a top reversal. It's a significant sign of weakness on a bar-by-bar basis, right? So now we're coming back up, and look at what happens here. We come back up. You want to be assessing the supply demand all the time. Well, on the way down, right, we're seeing pretty decent volume. On the way up, volume's drying up. It's not expanding to the upside. And so when we get back up here, you know you've got a sign of weakness in this 2-bar top reversal. You'd be looking for an up thrust in here, okay? And you know, this is a 60-minute chart or an hourly chart, so you might be down on a 15 or a 5-minute chart looking for, or a 10-minute chart looking for an opportunity to get short, and I guarantee you one would be presenting itself nicely right here. And then look at that look at the move you get down from there right into the close, a good 15 points, give or take, which is a nice, very nice move in the S&Ps. Any guidelines on strong up thrusts? Obvious up thrust versus weak up thrusts? Always look for the obvious. Always look for the obvious. That's what I would say. We'll see many more examples.